Let's start off with the fact that we're seeing the JSE all share at over 29,000 points. We ended the week off on a positive note, things looking slightly better on the global front. But I think what's really going to be telling is next week we've got US earnings underway, and that's going to either push us higher or lower.
Yes, I think we had a very good first quarter earnings result locally. We saw earnings coming off in quite a lot of companies, but some a little better than expected. But it's going to be a big driver of the markets. I think in the absence of any other drivers, there's a lot expected of earnings. Our own market nearly close to an 18 PE as we sit here at the moment. So I think generally and globally we need earnings to start catching up to some of the fundamentals. The markets have gone through the roof really. I don't think anybody could have anticipated this kind of momentum to the markets at the moment. So yes, it could prick a bit of a bubble that we might have developed now, or it could just fuel the momentum a bit more.
What sense are you getting right now, Vlad? Are you feeling confident that we could see things edging higher from these levels? Others optimistic, others not so optimistic that we've run way too hard, excess liquidity still a big problem?
I would like to see some consolidation done. It's to go and see things going up and up and up all the time is just to look for a bigger sort of drop at the end of it. And if earnings do catch up, it will be the best news this year.
Fed and of course interest rates globally under the spotlight. There's a big debate brewing in the US whether we should be seeing interest rates hiked to around 1%. Some say because yields are rising in the US, this should warrant another interest rate hike as opposed to going lower or even keeping rates between 0 and 0.25%. Craig, what do you think the next move should be for the Fed? Because we keep hearing that extended period of time being reiterated all the time.
Yes, and I think they're trying now to steer the market into understanding what they actually mean by an extended period of time. But interest rates are virtually at zero anyway, so they can only go up. I think once they've withdrawn a lot of the other fiscal measures and some of the other, the kind of quantitative easing measures that we've seen around the rest of the world, once they've withdrawn some of those, that opens the door for them to start pushing up rates. But I think it's going to happen before the end of the year. I think of all the major developed economies, the US economy is doing the best. I think if we look at quarterly growth forecasts, we're probably looking in the 3 to 4% kind of range on a seasonally adjusted annualized basis, for each of the next quarters for this year. So I think the US economy itself doing well, the consumers, starting to do better. So they could start pushing up rates a little.
Fitch downgrading Greece, BBB minus from BBB plus, things looking negative right now. But we're also hearing news that the Eurozone could be granting Greece some kind of emergency loan. So in other words, they won't have to go to the IMF. And we spoke about it earlier. We know that the IMF, of course, attaches quite a lot of conditions. Apart from that, Greece's deficit has fallen by 40% in the first quarter of 2010. So the austerity measures that they have put in place clearly working.
Well, they are working. I don't know if they're working enough. And I don't know if they have put long-term measures that will actually keep them out of those troubles. As far as the loan from Euroland is concerned, I would rather see China, for example, lend them the money because they have it, as opposed to Europe or even United States. In fact, maybe coming back to the interest rate discussion that we've had just now, instead of United States increasing those rates, and if you remember, this is where subprime has started, where everything sort of kicked in, interest rates increase, people cannot pay their loans, and then everything sort of falls apart. It's the China that can increase the interest rates. Currently, those interest rates are negative real interest rates. In other words, it pays people just to borrow as much as they possibly can and reinvest into their businesses. If China starts increasing the interest rates, the whole world will feel the effect of it. The liquidity dries up, and perhaps Greece will end up again in trouble.
Craig, your views on this? It's an interesting notion, China lending money to Greece.
Yes, but you have the haves and the have-nots, and I agree with Vlad there. I mean, Europe, a lot of them are not in a position themselves to be lending money to others. They've got their own problems to look after or to sort out. So I think it is a possibility. It helps China also to diversify its assets out of the dollar into the euro and to other territories.
Right, since I am wearing the World Cup shirt, I think we should start talking about the World Cup. I am supporting Argentina today. All right. And Bafana, of course. Craig, in terms of which companies you should be investing in if you want exposure to the Soccer World Cup, what do you have on your radar? We know the obvious ones, clearly the retailers, the hospitality stocks and so forth. What are you looking at?
I think all of those companies will do well, and I think that's where we have to make the distinction between the companies that are going to do well and the share prices that are going to do well. I think a lot of these companies will do well out of the World Cup. They'll boost their top line revenues. That doesn't always necessarily mean that they're going to boost their bottom line profits. And for a lot of them, and consider companies like Barlow World, for example, that holds Avis in their portfolio. Avis might shoot the lights out, but it's a very small part of Barlow World overall. Bidvest as well. Bidvest has got a lot of tentacles into the domestic economy, so they probably do the best out of all of the local companies. But again, it's a company with 120 billion rand revenue last year. If they shoot the lights out locally, in the context of all of that, what does it mean for their bottom line? So I think those are the kinds of things we have to think about. But yes, the car hire companies within those listed companies should do well. The hospitality, including the restaurants. Some that you might not think about, like Afrox, that puts all the bubbles in all the beers that all the people are going to, the tourists are going to drink. All the beer and all the Coke and the Fanta and the Valpraise and so on. So I think intuitively there's a lot of those, and particularly it is the hospitality industry that will do well. I think the mobile telecommunications industry will get a short-term boost. But again, if MTN locally also shoots the lights out, doubles their profits, what does that mean in the context of the MTN group? The same for SABMiller. If SAB locally here does extraordinarily well, it's still, 10, 12% of the group's earnings before interest, tax and amortization. So we have to think of those things in the context of the whole group and the whole group's earnings. So overall, I think it's more of a storm in a teacup than anything else. There's a lot of feel-good factor around it. That might boost the shares. I think there's more about the longer-term effects of this. If you have a good experience with an airline, maybe you'll use them to come back when you come back again the next time. Or the car hire company, they gave you a good deal, you'll use them again when you come back. I think that's the lasting thing that we want to try and get out of this World Cup, is those return visitors and get more people to come, and maybe we'll see lasting benefits in those companies.
Perhaps to put it also maybe, or actually carry on with the same sort of vein, MTN has about 13 million customers. I think optimistic estimations is that there's going to be 500,000 people coming for the World Cup. Even if they capture all of them, it's just going to be less than 5% of their total customer base that they have right now. So they, nobody's going to make huge amounts of money out of it. But what does seem to be happening right now is that everybody is just like, making the right moves and painting the cracks in the walls and that sort of thing. And that's very helpful for the economy and just clean up the act.
Craig, some would argue that most of these companies that you have mentioned have run quite hard, and in fact they've priced in any kind of gains that we would be seeing in the World Cup.
A lot of them have moved quite a lot. And if you look again at MTN or SABMiller, they've actually done nothing this year. So MTN's down 5% for the year so far. So I think all of these things, think about the World Cup when you're thinking about the shares, but I think there's even more factors that you should be considering whether to buy or sell the share. I think MTN probably been neglected after the Barty deal fell through. Nobody's really seems to be interested anymore, but I think that's wrong. So maybe that's one to look at, but not specifically just because of the World Cup.